But GNFC, that's the stock which is in focus, or the company rather. We thought we'll get a sense of what the volume and price trend has been for chemical segment, the scale up that they're planning for the FMCG division, competitive strategy thereof, and the product launches roadmap and the FY19 growth outlook as well that they've chalked out for themselves. Dr. Rajiv Kumar Gupta, MD at GNFC, is with us. Rajiv, hi, good morning. FY18 has been a solid year for chemical segment. What's been the volume growth that you expect for TDI and chemical segment overall this year as compared to the last one?
Good morning. Yes, we had a very good year last year, and so far in the last two and a half months, we have witnessed a steady growth, and also the pricing of various chemicals has been fairly steady. TDI, yes, but through I would like to make it very, very clear to the viewers of your channel and also the analysts that this company should not be evaluated only on the basis of TDI. We are makers of another 20 different types of chemicals. We are the market leaders and the only producers of acetic acid, formic acid. We have very large volumes of ethyl acetate also. Now, for instance, acetic acid and formic acid, they have been ranging at highest ever price realizations for the last 3-4 months. Even methanol, which traditionally used to be very, very low as far as price is concerned in earlier years, but for last 6 months, it has been very, very steady and almost at the highest levels. And we are the only daily producer and seller of methanol in the country. Now, coming back to TDI. TDI last year we had almost 93% price volume realization, the production levels. We have already fixed up a target for ourselves that we will increase this year that capacity utilization of TDI and would like to take it beyond 100%. And we have been consistently maintaining that. As far as the prices of TDI are concerned, there is a slight difference between domestic prices and the export prices. Now, domestically, we have been serving almost 65 to 70% of the domestic market, which is about roughly 50,000 tons per year. And right now, we have increased our supplies to the domestic market because we are getting a price realization of almost equivalent to $4,400. So we are giving almost 70 to 80% of our supplies to domestic market. And as such, there is an anti-dumping duty. So we are duty bound also to serve the domestic market. As far as the international market, a very important trend has come up, that there is no significant price increase or price decrease uniformly. It is all depending on demand and supply factors in various regions. For instance, the prices in Africa, they sometimes heat up, but the prices in Middle East, they sometimes come down depending on the supplies and demand. But still, for the last
since you're talking about prices, I just want in one clarification. Tell me, what are the average prices for TDI in the first quarter, and what is the near-term trend that you're expecting?
See, we have been selling TDI at a price of 2,95,000 for the last many weeks domestically, which roughly corresponds, as I said, to $4,400. As far as export prices are concerned, as I in details said, that the prices depend anything between $3,700 to $4,000 depending on the quantities and the regions that are demanding them. Now, it is very significant that we already have about 2,500 tons of export orders pending, which are booked with us, and another inquiry of another 3,000 tons. So, TDI demand, as far as demand is concerned, there is no letdown in the international demand. Prices are ranging or changing between a band of $200 to $300. But domestically, as I said, the price we are realizing is about $4,400 to $4,500.
Let's also talk about what the outlook is when it comes to the traction in the TDI exports versus your domestic growth.
See, I have been consistently maintaining, it is our company's policy that we would like to serve the domestic market first. And therefore, we increased our market share at one point of time, 2-3 years back, we had just 32% of domestic market share. We have almost doubled it, or rather more than doubled it. and we would like to consistently supply domestically more, because we are getting, number one, better price realization. Number two, there is an anti-dumping duty, so we are duty bound to serve the domestic market. Number three, it is easier and price realization is faster. But having said that, we have a capacity of almost 67,000 tons per annum, which is far exceeding the domestic demand, which is about roughly 50,000 to 52,000 tons. So 16,000 to 25,000 tons of exports we will continue to maintain, depending on demand, depending on maintaining and containing those markets, capturing those markets which we have maintained so far.
Finally, leave us with your execution and capex plans, and do you think that we can see an improvement in your margins and your revenues going forward?
Yes, our board, we have said it in public domain earlier also, our board has decided for expansion in certain known and experienced areas. We are very strong in acetic acid, we are very strong in formic acid, we are very strong in concentrated nitric acid. So in all these three areas, the board has approved expansion plans, and the things are going on in the right direction at the right time. And we have also decided to increase the ammonia production capacity. But at the same time, we are also doing a lot of investment in TDI to improve the sustainability and to improve the capacity utilization to 120% level. And that expansion plan for TDI has also been approved. So in coming few years, yes, definitely there would be greater margins and greater volume growth.
Okay, good to hear that, Mr. Gupta, and good luck. Seems like it's going to be a fabulous quarter and year ahead planned up for you, and we look forward to chatting when your earnings do come out. That's GNFC, extremely bullish sounding management, holding up currently the stock a little soft, but that's okay, you can ignore that. The rest of the market also seems to be the same.